Hello, I'm attorney John Koenig with Elder Advisors Law, and we're here at the beginning of 2021 starting our series of what we're calling our EDU-CAST. These are little 15-20 minute video clips answering questions that our TLC members ask about. And guess what we get to start with today? We get to start with taxes. Nobody likes to talk about taxes. As a matter of fact, you're not even supposed to talk about taxes at family gatherings. However, we have to discuss taxes because that's one of the most frequent questions we get. How does my trust affect my taxes? Now, the simple answer is, if your trust qualifies as a grantor trust, it does not affect your taxes one way or the other. You file your 1040 like you always have. But that's a simple answer, and answers to legal questions are never that simple. So we have to take a look and realize that there's three areas of taxes that most people are concerned about. Income taxes, what we'll talk most about today, but people are also concerned about capital gains taxes and estate taxes. We're going to talk about those in reverse order because the estate tax is the simple one. If you're married and you have more than $22.5 million of assets, then we need to worry about estate taxes. If you're single, you cut that number in half. That does not affect hardly any of us. Matter of fact, I think the numbers tell us that only 0.1% of our people in the United States have that tax issue. So, if your estate's no larger than $22.5 million, don't worry about estate taxes, or sometimes death taxes is what they're called. And by the way, just so you know, if you do have an estate over $22.5 million, everything above that number is taxed at 40%. The second tax a lot of people are concerned about is capital gains taxes. And you get capital gains taxes when you have bought an asset, like a house, and then it accumulates value, and then you sell it, so you have a gain that's realized from the sale of it. Again, the nice thing about the type of trust planning that we do here at Elder Advisors Law is that capital gain taxes are almost always eliminated after one or both of the spouses pass away. So again, capital gains taxes is not a big issue. But the bigger issue is income tax. Anytime we earn income, the IRS wants a portion of that. And that's true when it comes to your trusts as well. We at Elder Advisors Law like to speak in plain language. We want to avoid as much of the legalese or the legal jargon as possible so everyone understands what we're talking about. But when we're talking about taxes, we do have to use one very specific legal word, and that word is grantor, G-R-A-N-T-O-R. A grantor is the person who originally owns an asset, who creates the trust, and then transfers the asset into the trust. Remember, that last part is really important. As Doug likes to say, you got to put your stuff in your box. So, when you have a trust, it has to be funded or your assets put into that trust. But the grantor is a specific term in the IRS code. And the key is to qualify your trust as what is known as a grantor trust. And 99.9% of the trusts we do here at Elder Advisors Law qualify as grantor trusts. Some of the ways we qualify as a grantor trust is by you being your own trustee, by you having the right to change your mind on who your backup trustees are, by you having the right to change your mind on who your beneficiaries are, the people who will ultimately receive your assets. All of these provisions and many more in our trust qualify your trust as a grantor trust. And if your trust qualifies as a grantor trust, it does not have to pay taxes on its own. Everything is flowed into your 1040 just like always. But let's talk a little bit about income taxes, and let's give some specific examples. If we ignore any type of deduction or any type of exemptions in taxes and look purely tax numbers, if you earned $10,000 as an individual, you'd pay roughly 10% of that in taxes, or about $1,000. Now, if you had a trust that did not qualify as a grantor trust, and you had income of $10,000, you're in the 35% tax bracket. So trusts are taxed at an accelerated rate. Matter of fact, for a trust, if you have more than $600 of income in any 1 year, that means you have to file a tax return for the trust. Fortunately, if you've done your planning with Elder Advisors Law it's very likely that your trust will qualify as a grantor trust. And remember, if it's a grantor trust, the IRS ignores the trust. You still file your 1040 just like you always did. You'll still get your 1099s and your W-2s and all the rest of the forms that you would receive on your earnings and your income. The difference might be the name of your trust might be at the top of the page rather than your name. But under the IRS code, it's all taxed under your Social Security number if you're single. If you're married, it's taxed under both of your Social Security numbers, just like you file your normal married joint tax return. So if you're doing your own taxes, nothing needs to change and you don't need to worry about anything, or even if a friend is helping you with the taxes. But we always run into an issue when another attorney or CPA or a tax accountant is doing your taxes. If that's the case, they're going to want to give us a call because they are not going to fully understand what I just very simply and very concisely told you, that the trust does not need its own taxpayer identification number and does not file its own taxes. If they call our office, we can give them the exact information they need, the exact references to the sections and the chapters and the verses of the Internal Revenue Code that shows that our trust qualifies as a grantor trust, and therefore there is no additional tax returns that need to be done. Again, we are always here to answer your questions. You're a TLC member, which means you have full access to the attorneys as well as any staff in our office whenever you need them. Don't hesitate to give us a call with your questions, a tax question or otherwise. We're here to help you. We're at Elder Advisors Law. We are helping families and protecting generations.